Right, good morning, Mr. Andrew Montlake. 400
Good
appearances
morning.
to be. Footballer, centre-half extraordinaire, massive Liverpool fan, and more importantly, mortgage personality of the year. And MD of, I'm going to get you to tell it because I'm going to say it wrong. So, MD of
Coreco.
Coreco, there you go, thank you. Mortgage advisors.
There you go.
And where are you based?
So our office is in central London, so right by Liverpool Street.
Yeah, so you've been a broker for how many years?
Well, as you can see from my boyish good looks, I've been a broker for 26 years now. It's been a long time.
Years.
Yeah,
it has been a long time. I remember the two of us playing centre half together.
I remember it well.
Trying to kick those centre forwards off the park.
You were a lot better player than me.
Oh, you're very kind. Did you hear that, Andy Overman? I was a right baller centre half. So really grateful for your time this morning. Thanks very much.
Pleasure.
I know you've got the kids to go to school very soon. So it's just for people watching now, watching on replay or listening on the podcast. It is Tuesday, the 10th of November, because I know things are changing on a daily basis. You put out an article yesterday, Andrew, about mortgages and what's happening in the mortgage market. And according to that, more products available, which is obviously good news. However, you're seeing rates rise. So morning, Andrea, morning, Andy. Peter Lawrence, thanks very much for joining us this morning, bright and early. Really grateful. So thank you. So on the ground, what is happening in the mortgage market and what are you seeing, please?
Well, we've gone through an extraordinary time, like all of us have, really. So mortgages are starting to. The problem that lenders really had was around capacity. So they had a real problem with their staff, like all of us did. The problem was when you got the levels of staff that a lot of the big banks have, making sure that they can work from home effectively is really, really difficult. And if you take your typical mortgage underwriter who might be working in an office, high-speed internet, colleagues all around him or her to bounce ideas off, 2 screens, and then you move that to dodgy internet connection, kitchen table, kids running around, no one to bounce ideas off, they really, really struggle. And they haven't really got to grips with it, which is quite worrying after 7 months or so. So lenders pulled back massively in terms of capacity. And they really, really struggled to get mortgages out. And the best way they found to do that was either to reduce products or to hike prices. And what they also did was they pulled back from anything that they thought was risky. So 90% mortgages, even 85 and 80% mortgages at first. But what we've started to see is that's come back a little bit. We're still really, really short on 90% mortgages. 95% mortgages are basically non-existent unless you go to the Help to Buy scheme. But Moneyfacts yesterday was reported that we're starting to see products come back, but they're still struggling. And if you think about it, when you turn the property market off and then you suddenly put it on again, you've got all that pent-up demand released, as all you estate agents have seen, and you added fuel to the fire on that with a stamp duty holiday, and everything goes absolutely crazy, as we've all seen. But lenders can't cope, and we're starting to see that not only lenders can't cope, but conveyancers, solicitors can't cope either. So we're starting to see some problems there. But in the meantime, mortgage lenders who are coming back to the market, they're just starting to increase their rates. So even though we've got bank base rate at its lowest ever at 0.1%, they're still increasing rates slightly to try and stave off demand because they can only take so much business in. The problem with that is you get one lender putting their rates up. So there's one lender left with the lowest rate. They put their rates up, and then the next lender puts their rates up, and it becomes an ever increasing feast. So that's basically what the character of the mortgage market is at the moment. We're seeing some lenders come in, take a bit of business, then increase their rates to try and stop business again. Another lender takes over, etc., etc. So it's really, really, it's something that for the first time as a broker, we look after about 90 to 100 different lenders we can access. So keeping up to date with what's happening is pretty tough work at the moment.
Okay, so just say thank you for that. So a few more people that have joined us. Morning, Jeremy. Morning, Ashley. Morning, Mario. Thanks very much for joining us this morning. Question from Peter. How close are the lenders with open banking? The way they're working is so old school.
That's a great question. We ask that every year. We think this is going to be the year of tech, the year of open banking. The reality is that lenders are still quite a way away. One of the good things that actually comes out of all of this is lenders are now being forced to invest in technology that little bit more and push things forward that little bit more because of everything that's happened at the moment. But I think open banking itself, although there are some lenders who are experimenting with it, I still think there's some way away from that. So you're probably another couple of years, even more, away from lenders embracing it wholeheartedly at the moment.
So on average, if I put in, you mentioned the stamp duty holiday, and potentially that's going to come to the end of March next year. How long is it taking on average to put in an application to actually get a mortgage offer out now?
Well, we monitor this a lot from different lenders, and as ever, different lenders have different timescales. So application to offer for us, we're looking at, we say on average about 3 to 4 weeks at the moment. It does really depend on the lender. We're still getting, so yesterday one of our guys got an application submitted and it was offered 3 hours later. So wow. It really does depend on A, how well the case is packaged, B, whether they've got a good deposit. So if it's a less risky mortgage, they've got 40% deposit. Then potentially if they're doing an automated valuation and it fits their model for that, it can go quite quickly. But as soon as there's some kind of issue, you've got some lenders who are taking 12 to even 20 days before an underwriter is even looking at a mortgage you submitted. So it really does vary across the board. And what we have seen is the average time from application to completion has increased dramatically, and there were some stats around that. So to the point that most people suggest that if anyone wants to buy a property now and complete before the stamp duty holiday is up, there are some people who just won't make it.
Okay, so this is obviously an audience for estate agents. What advice can you give to them to get their buyers buyer ready and their seller ready, which hopefully may speed it up?
I'm a big believer in the Holy Trinity: good estate agent, good mortgage broker, good solicitor. That's that we see that goes through. If you've got if one of those key elements falls down, then a deal struggles. We speak to a lot of estate agents, and we pre-qualify people, so just to make sure that actually they are able to proceed. It's something that's a really good idea to do, especially in this market, because people don't really understand some of the decisions that lenders are making. Even if you've got a good self-employed person or someone with a decent income but might just be in the wrong type of industry for a lender at the moment because they're a bit risk averse, then it can cause problems. So getting them pre-qualified early, making sure they have their documents all in order, is something that's really important at the moment, and we do that work with a lot of estate agents.
Okay, so I want to come and ask you about furlough, people on furlough at the moment and whether they can still get messages. Peter's just added, referencing companies for lettings can do it, so disappointing the banks will not get involved. Andrea, who's based in Scotland, so people are looking at properties without a mortgage promise in place are wasting our times with viewings. There you go.
Not necessarily, but it's, the sooner you can get a mortgage agreement in principle. It's not just a mortgage in principle. Some people get carried away with getting a mortgage in principle. It's at least speaking to a broker to make sure that they are in the right ballpark. I can get anyone a mortgage agreement in principle within about 3 minutes, and it means nothing. It's all about actually talking to the client, making sure you've seen their documentation, and making sure that actually they can do what they say, what they think they can do. So that's what's important. But yeah, there are a lot of time wasters out there who don't actually know they're time wasters. But as I say to my guys, these are people who do want to buy a property. So even if they can't do it now in this environment, it's important that we speak to someone, pre-qualify them now, and they might come back in the future.
Okay, so you touched on documentation there. What sort of documentation should agents be saying to their buyers? This is what you need to get, and going out, maybe doing a video, educating them. So, you know, as soon as they're ready, what sort of things would they need? Morning, Michelle. Morning, Kevin. Thanks for joining us.
So the standard things like proof of identity and proof of current address, that's fine. Little tips like making sure they're on the voters roll at their current address. That's a good one for to make sure that the lender knows exactly they can find them, etc. Last 3 months bank statements, something important. Little we train people around actually what that actually means. So if you're doing things like online gambling, maybe stop that for 3 months before you apply for a mortgage. Things like that. 3 months pay slips, last P60. One of the biggest things that slows down a transaction is
we're joined by my dog saying good morning. Come on, good boy. He's seen the squirrel in the garden and going mad. This is the thing about life. Really,
yeah, exactly. Yeah, I'm sure my kids will start screaming at me
over here. Sorry.
So, yeah, one of the big things is proof of deposit. So lenders really want to see where that deposit is coming from. So savings in bank statements. If it's a gift from parents, then most lenders will want to see a bank statement from their parents, or also a letter from their parents saying that it is a gift, that they're gifting it to their kids. So it's that type of thing really that they need to be seen.
Okay, and do you think it'd be a good idea for agents to do some videos to get the message out there? You know, this is what you need to do in order to be buyer ready, and that's going to save some time and make a difference.
Yeah, I think especially at the moment, that's never been so important. If we can get someone who's understands the process and has all their documentation and knows a little bit about what to expect, then it makes such a difference. And yeah, I love stuff like that. Any type of little educational videos for people. It is amazing how little people know about the mortgage process. It really is. And that's something that we're really passionate about, financial education. I think that needs to get better, and we can all play a part in that.
100%. So just coming back, quite a few more comments here. Peter, again, working smarter and not harder is key. Better conversations from viewings to conversions from viewing to deals, and mortgage AIP is a must. Rob, don't get too carried away with AIPs. We've had a couple of buyers who've had their AIPs for 6 weeks and the deals have expired, so they need to be.
Yeah, that's right.
Advisor. Fully agree, but I bet nearly 50% of applicants that register do not ever view a property. So something and a small commitment is better than nothing. Morning, Sharon. Andrea, we've had buyers who say they're fully cash purchasers, and we find out that whilst conveyancing is going, that they've decided to apply for a mortgage, and then it means they can't complete on time. Any tips on that, with asking questions about whether they're fully cash, or what does fully cash mean?
Yeah, that's a really difficult one. I've had that for 20 years where, you know, you speak to someone on the phone and you say, oh, what have you said to your estate agent? And they say, well, I've told them I'm a cash buyer. I don't want you to tell them. And you're like, well, that doesn't really help. You're meant to be working with the estate agent. So yeah, it's a really difficult one. We have agents who insist that we have to pre-qualify people, at least talk to them first and foremost. It's quite a difficult balancing act at the moment, because whilst agents can insist that the applicants actually talk to a broker, they can't force them to. So you can't say that, for example, we're not going to accept your offer until you speak to our mortgage broker. So it's about finding better ways to do that. But pre-qualification, and just to make sure, if someone goes into a shop and they want to buy something, you always ask for the money or proof of how you're going to pay for it. And sometimes it's interesting how many estate agents actually don't feel comfortable asking that question, or actually asking for a little bit more proof. If they say they're cash buyers, then my understanding is you've got every right to say, okay, that's fine, but we need for our records just proof that you do have the cash, whether that's a bank statement or something like that. Yeah. So I think that's a way to approach it. Okay,
lovely. So coming back, furlough, how are you finding that? Are banks still lending to people who are on furlough, or do they have to supply more documentation, or is it just, I'm really sorry?
Again, depends on the lender. So before the furlough scheme was extended, we started to see lenders saying, do you know what, I'm not accepting anyone on furlough. But now it's been extended, lenders are going back to what they did do. So most lenders will ask for, now they'll ask for obviously proof of the furlough, and some will even ask the employer to confirm that it's their intention to bring them back, which obviously is proving quite difficult, because if I was furloughing people, I'm not sure I put in writing that I could guarantee that I'll bring them back. It's quite a difficult one. So we're finding now that if people are on furlough now, it's harder and harder for them to actually get a mortgage.
Okay, and what about people if they've taken a mortgage holiday? Is that affecting lenders?
So this is another great question, and one of discussion between the FCA and brokers generally. So they said that anyone taking a mortgage holiday would not have their credit affected. However, what we've seen is, whilst it's not directly affecting people's credit, mortgage lenders are taking it into account when they're looking at new mortgages coming through. So if someone's still on a mortgage holiday and still having it, and they apply to purchase a new property and get a new mortgage, then lenders will ask the question. Some lenders just won't lend if you're still in a mortgage holiday. If you're out of the mortgage holiday and you've had one previously and you're all fine now, then there's not much issue. But that is starting to be a little bit of an issue going forward.
Okay, a couple of final questions, because I'm conscious of time and I know you've got to look after the kids. So if you've got to go, just tell me and we're going.
No, it's fine.
Buy to let market. What's that? What are you seeing on that?
That's something that's proved robust, pretty much. I mean, when the stamp duty holiday came out, I guess none of us expected that it would apply to buy to let and second time properties and those buying in a limited company name as well. But one thing that's happened as a consequence of that, and because of the lack of 90% mortgages, which has really kept first time buyers a little bit out of the market, is that buy to let landlords have started to come back. So we've had a busy time with buy to let landlords. Actually, a lot of them either looking at getting cash out of their existing portfolio because they think actually going into next year cash will be king and there'll be some deals for them to do, or actually looking at new properties. So we've done quite a lot of buy to let business, and interestingly, one of the biggest parts of that is the first time buy to let landlord who actually thinks, actually, now I've thought about getting a second property for ages. Now's a good time for me to do it. I might as well take the 15 grand stamp duty help and actually look for that, or holiday lets, or just for the second home outside of London, which is their lockdown pad. So that's something that we've seen really, really grow.
Okay, that's interesting. Down valuations. Are, are you seeing them? Are you starting to see them? Are the banks saying to their surveyors, there's rumours out there, if you see something, down value it by 5-10%. I mean, I hadn't heard of many down valuations, but the last 2 or 3 lives that I've done, people have been commenting to see that they're seeing more and more. What are you seeing your end?
I love this argument with surveyors because they say there's no such thing as a down valuation; it's just a correct valuation. So I love the banter around that. But it's another really interesting one because if you look at the Nationwide and Halifax House Price Index, I mean, they're talking about house price growth of about 5, 6, 7% now this year. So it's really interesting, but yet you've still got valuers who are making some strange decisions. It tends to be a lot of where we do have a lot of problems is certain places in the city like Canary Wharf, where even the most minuscule part of anything that can be construed as cladding is causing a massive issue. Down valuations themselves, we probably haven't seen as many as I thought we'd see. And I think that's because of, although people are nervous about what's going to happen with the end when furlough does actually end and etc. Because it's been so buoyant and house prices have been rising this year. Even the people who think there's going to be a come down next year, which there will be, if you get house price growth of about 5 to 7%, next year probably looks realistic of actually house price growth will slow. Maybe we'll see anything. I think Savills came out and said between -2% to 2% in terms of house price next year. And that's probably about right. So what we're not going to see, I don't think, is that big scale house price fall that the doom mongers have been predicting for about the last 5, 6 years anyway. So they're going to be disappointed again. So I think surveyors they're cautious. I don't think lenders are telling them to be overcautious because we've had that discussion with lenders. But I think they're just being a little bit cautious, and in some areas where they think potentially there's exposure to maybe one particular industry, or there's issues around actually the people in more low-paid jobs, etc. Then we're starting to see some slight ones, but we're not seeing a whole-scale down valuations across the board. And a lot of the stuff we're seeing is actually valuing up.
Okay, so just some final tips for agents to have conversations with surveyors who are considering not making it the correct valuation.
Preparation. So, as you all know, valuers need three examples of similar properties that have sold. So the more comparisons you can have, the better. It's just valuers like it if you've got that information and they can look at that and use that comparable evidence, and that really helps. The problems we're seeing is where that comparable evidence just doesn't exist, and that's the problem. So that's always been a bit true where the new build market is concerned. But because there aren't that many mortgages around at 90% at the moment, it becomes less of an issue, because valuers are feeling a bit more. If they're putting in a decent deposit, it's not that much of an issue. But being prepared, having that comparable evidence is the key, really.
And have you found more people, more first-time buyers, have managed to save because of lockdown? So they are able, and with the stamp duty saving as well.
Yeah, we're seeing. So yeah, some first-time buyers have said it's actually been really helpful. That they're not commuting, they're not spending their money in bars and restaurants and every night, and actually they've saved quite a lot of money. So I think you'll see the return of the first-time buyer if stamp duty does end in March, although I think he might extend it actually. And as an industry, we've actually written to the Chancellor to see if he can extend it or at least taper it so we don't see this cliff edge. But I think once that's finished, actually what you'll see is mortgage lenders start to come back into high loan to value mortgages as the demand starts to fall and things start to get back to some normality. And I think the next rush is going to be the first time buyers coming back into the market again en masse, who have felt that they couldn't do anything now. So the pent up demand is going to be in the first time buyer market. So I think next year, certainly probably the second half of next year, that's going to be a feature of the market.
Brilliant. And we're in, Peter said, pre-COVID, 8 billion in UK bank accounts, currently 36 billion in UK bank accounts. So
yeah, absolutely. Yeah. I don't know why my bank account doesn't look like that. I think it's all the Amazon deliveries that I'm getting.
Andrew, thank you so much for your time. Incredibly grateful. If people want to get hold of you, I know you're all on, I'm very honoured, you're normally on Sky or local channels, BBC, and you're now on the Stephen Brown channel, so thank you, incredibly grateful. So for people to get hold of you?
They can get me on Twitter at Monter's blog, or Coreco at Coreco on Twitter, or LinkedIn.
Okay.
They're the best way.
Brilliant. Thanks very much for your time. Thanks very much for watching, listening on the podcast, watching on replay. Please join me at 12:30, where I'm going to have Charlie Perdius and Asad Riaz from Anthony Pepe and Location. Going to be talking about their new collaboration in new builds and new homes. So thanks very much, Andrew. Thanks for being an amazing guest.
Thanks a lot.
Very much for your time really early this morning. Really grateful. Have a good day, everybody. Hopefully see you at 12:30. Bye.